Oh, hello to all my subscribers and all my darling people that send me beautiful emails. I hope you're all happy. Well, I hope you're being really nice to yourselves, eating properly, sleeping properly, being kind to yourselves, kind to your family and friends, kind to your animals, and just making this world a better place rather than it being cold and horrible with no one caring. I thought I'd do a thing on why does XRP keep going down when the fundamentals are so good, excellent in fact. I know it's really, really frustrating that XRP keeps going down, but that's markets, unfortunately, and often markets can do things that sometimes we just don't have any explanation for. And I've seen that time and time again over the years. So this is educational only, of course. I'm not a financial advisor. I don't give financial advice. I basically just present this as education only, and I'm not aware of your risk tolerances. Your basically how much losses you can take in terms of cryptocurrency and like, which is the most extreme, volatile of all the movements in markets, and more volatile than all the markets put together. So what I thought I'd start with first is the internet and Google, because I think it's very apt, and it basically sort of puts it into context. The internet itself, and I'll just start here first. The internet came out on August the 6th, 1999, and it's called the World Wide Web, as we know. And it didn't come out with a lot of fanfare. A lot of people didn't know what it was. And as I said to you before, I remember using it in Australia, I think in about 1993, something like that. And I remember at the time, we thought it wouldn't last. We just didn't understand it. We couldn't use it. We couldn't remember, all the WWs and all the different addresses. We had them written down, and we were like really, really frustrated. And it took, probably about 4 or 5 years for it to actually be integrated into businesses. And because we were in treasury on the front desk of big banks and managing and trading money per se, lots of money, we were probably one of the first to get it. And we were just treasury dealers. We didn't have any idea about IT or technical stuff or technology or anything. So it was quite frustrating for us, and we didn't understand it. And I guess the thing is, it took probably at least 4 to 5 years for it to become mainstream in the 1990s. So particularly in Australia, I don't know how quick it became mainstream in America. Maybe it was quicker in America to become mainstream, but in Australia, I would say probably about 4 to 5 years from the time that it actually came out in August 1991. And my understanding is it was an American invention, and the Americans make some incredible inventions, and this is one of them. So keeping that in mind to the relevance of this with XRP, why XRP keeps going down. Also, later, Google came out, and Google came out in January 2004. Obviously, they hired Morgan Stanley and Goldman Sachs, one of the two largest investment banks globally in the world, who have heaps of clients on their books who they could sell initial public offering to. An IPO is initial public offering. And Google at the time raised $4 billion. And basically they went to initial public offering, and it took place August 19th, 2004, and they sold their initial shares for public offering. The first time they went onto the share market at $85, and then subsequent to their initial public offering, which is called their initial public offering, they went onto the secondary market where me, you, and everyone else could trade that stock. And even at the time with Google, and I remember my boss talking about Google, back in the early 2000s, I didn't know what Google was. We had all these different search programs at the time, and I can't even remember what they were now, but they were all these different search programs, and Google was the one that lasted over and above all those search programs. And I remember my boss showing me this when I was working with Schroders Asset Management, this search program called Google, which I'd never heard of. And I remember him telling me that his brother was an equity trader, trading US equities, and he'd bought this thing called Google, and he basically told me to buy Google because I'd make a fortune. But at the time, like everything, I was young and I didn't have much money. So my point is, when Google came out and the internet came out, it took a while for people to understand the technology. And in those days, obviously, you know, the internet came out and that took a long time. Google came out and it took a while for people to understand the technology. And I guess that is very similar to what's happening in the cryptocurrency market. People don't understand the technology. The people out there, the main public, the masses, if you want to call it that, they don't understand the technology of cryptocurrency markets. And there's people all over the place saying it's Ponzi schemes, they're negative, they're this, they're that. JP Diamond from JP Morgan saying the same thing. You have a lot of people saying all sorts of things publicly, and obviously the masses that watch TV, which I don't, obviously, the masses that watch TV basically believe that and think that, you know, the cryptocurrency market is a scam, and that it's a Ponzi scheme. It's not. You know, they don't understand the technology and they don't understand what it's about. And that was pretty much, from what I can remember, back in 2004, 2005, and in the 90s with the World Wide Web and the Google search engine. That's pretty much what we all thought at the time. So it doesn't surprise me that people now think the cryptocurrency market is a scam, because people don't understand, even the professional market, like the professional footballer market, compared to the amateur football market, don't understand the technology. They can't get their head around what it can do. They don't understand all the technical words, and they just don't get it. So if we look at Google at the time, when they came out on their IPO, and this is back in 2004 when they came out in their IPO, it actually traded below its IPO price, okay? So Google came out at $85 US, and as soon as it came out, the market went down, the stock price went down, and it traded below its IPO price of $85. And if you look around here where this chart is a long dated chart way back to 2004, you know, it opened up at $52, got to a low of $49.52, and basically was doing low volume, and it was going down because people didn't understand the technology. And all I can say is that's pretty much what's happening with XRP. Not only are we looking at a cryptocurrency market overall that's going down, but the technology of Ripple and XRP, because it is more technical than, say, other cryptocurrencies that are on platforms. Obviously, it's being sold more than other technology because people don't understand the technology. So even when we look at Google, which is now called Alphabet Inc., I don't know why they changed that, by the way, it traded below its initial public offering price of $85. So the initial investor would have lost more than nearly, not quite half, but a good 45% of their capital, from $85 down to, maybe $50, okay? So if we look at the picture overall now, from obviously 2004, it took a long time from 2004 to, say, 2009, 5 years, for it to get, say, to about 150, 160. Then it took a long time, another 4 or 5 years, for it to trade over 250. And then from 2013 to 2018, we saw this market, go from literally 250 right up to 1237, where it is now, in the space of, what are we looking at? In the space of 7 years. Okay. Now, I'm not saying cryptocurrency will take that long. My belief is cryptocurrency and Ripple and XRP, particularly XRP, will be a shorter duration for takeoff, because we now have the internet. The internet connects all the news, it connects all the markets, it connects everyone worldwide, regardless of whether you live in Africa or whether you live in Mexico or Korea or whatever. As I've said before, we do have a lot of poverty in the world. 4.1 billion people are in poverty out of 7 billion. But the interesting thing about that is, even in Africa, where there's no toilets or sewage, or in Asia or whatever, no toilets or sewage, they all seem to have a phone. Okay, so phones, and obviously running a mobile phone is cheaper, clearly, than putting in sewage. So what that's going to do in terms of the market, and that's where we need to take a step back. I know XRP looks it's going to go lower and lower and lower, But ultimately, if we keep in our mind that any other new technology in history that came out, there was mass disbelief. The masses disbelieved in the technology initially. And that's what happens in markets. People are more skeptical than not, and they disbelieve the technology, and it takes a while sometimes for people to understand the technology. And you know, the fact is, say with Google, for example, Alphabet Inc., you know, if you'd bought it $85 and sold out, you would have lost half your investment. But if you held on for a good, 10 years or more, your investment literally went from $85 up to, 12.37 US. Now, my honest personal belief is XRP will be a quicker duration, a quicker time period for the masses to understand the capability of that technology. And as I said before, it's because people have mobile phones anywhere in the world. They have mobile phones, whether they're poor or rich. They generally have the internet at hand or the mobile service connection. Also, globally, domestically, everyone in the world has a cash flow settlement problem. So XRP and Ripple basically can give you your cash flow instantly, over and above the old SWIFT system, which is like a horse and a buggy through the banks, which has enabled the banks in the world and in Australia to make masses of amount of profit because they hold on to your money. So whether you're doing a domestic payment to a friend, or whether you're expecting a receipt in from, say, a subscriber through PayPal or Stripe, or just from the bank, it will take you 3 to 5 business days. And if it's on the weekend and someone pays you on a Friday, you will not get that money until Wednesday or Thursday of next week. Now, XRP and Ripple, as I've said time and time again, someone will pay me a subscription and I will get that cash flow settled instantly. Now, you might have RippleNet, out there saying, yes, we do cash flows and we can settle instantly, which we do. But you might have other service providers saying, we make payments instantly. Now, the thing is, payments instantly is not cash flow instantly. You understand what I mean? If someone says like SwiftNet, which is what they're calling themselves, SwiftNet, in competition with RippleNet, which they're not, because as I said, they're a horse and buggy, and Ripple is the speedboat. SwiftNet are now coming out and saying we can make payments instantly. Payments, anyone can make a payment instantly. My friend rings me up and she says to me, Susie, you owe me $100. And I go, yeah, oh, look, I'm sorry, I forgot. I'll make that payment right now. So, yes, I've made it instantly. But my friend does not get the cash flow for 3 or 4 days. You see what I'm saying? So, there's a big difference between payment instantly and cash flow instantly. And with the advent of the internet, the masses will start to understand that with the use of Ripple technology, even if you don't use XRP, you can get your cash flow instantly. And that is a problem for everyone. Anyone that tells you that Ripple and XRP is only for the banks only are just being absolutely ridiculous, because everyone has a cash flow problem instantly. If they do not use Ripple or XRP or together or just Ripple, they will not get their cash flow instantly. Even with the other cryptocurrencies, whether it be Bitcoin or Ethereum Classic, or the others, where they have miners, Litecoin, and where they have to validate transactions, and you don't know how long it's going to take for those transactions to come through and for you to get your cash flow instantly, which you don't, because you don't know how long that money is going to come through. That is not cash flow instantly. And that's why a lot of the hedge funds cannot use Bitcoin, and they cannot use Litecoin, they cannot use Ethereum Classic, they cannot use Bitcoin Cash, they cannot use Ethereum, they cannot use any coin where there are miners. Because miners, as you know, have to work out the cryptocurrency's password through encryption with their technology. They then have to take a payment to validate that transaction and to push it through the system so that you ultimately get your cash flow. And there is always a time delay on that. And we don't know how long that time delay is, because there could be a queuing process in terms of the number of people that are using Bitcoin, Bitcoin Cash, Bitcoin Diamond, Bitcoin Gold, whatever you want to call it, Ethereum Classic, and the list goes on and on and on, because you don't know when you're going to get your cash flow. So the point is, payment instant and cash flow instant are two completely different things. And this is where you need to be very careful of terminology, because there are, obviously there's operators out there like even SwiftNet that aren't being honest. A payment instant is not the same thing as a cash flow instantly. So this situation of cash flow instantly is a global problem for every individual in this world. 7.1 billion individuals in this world, and whether we work for corporates, banks, whether we work for ourselves, whether we're an importer, exporter, whether we're a fish and chip shop, whatever, or whether we just have our own banking to do, instant cash flow is a problem. And the minute we don't get our cash flow instantly, someone is holding on to that cash flow and someone is making money out of that cash flow. You see what I mean? Whether it be interest, or whether they're lending it out to their property people, or whether they're lending it out to someone else. Someone else, if that cash flow doesn't go where it should be going instantly, someone else is making money out of that. And that's the point I want to make here. Anyway, also the point I want to make is often markets get it wrong. Markets just get it wrong. So again, if we, again, look at the price action, over time, we see, there was a lot of volatility in Google, up and down, and it took a long time. Went below, it got to $50 and its IPO was 85, and then it got up there, 340 something, and back down. And that's what markets do. People buy things, they're short term generally, they don't hold things for the longer term as an investment, and they trade, and traders come in and they push things down and they push things up. Now with XRP, we have seen a lot more weakness compared to other coins and tokens, because there's been a big whale out there selling $1 billion for one reason or another. And it could be just because they're traders. We don't know. We don't know who they're selling that coin to, but it's been pressuring the market downwards when the market is already negative overall, the cryptocurrency market. But I guess what I'm saying is you've just got to take a longer term view. If you're not a trader, I'm not an XRP, I'm an investor. I don't look every day at the 1 cent movement, the 2 cent movements, the 3 cent movements. I'm happy to sit in my XRP for a minimum of 2 years, because I know it will take time for the masses to understand the capability of XRP and Ripple. And like in the past, nothing has changed with the masses. They doubt the new technology that has come along. They doubted the internet, and it took a while, it took at least 4 or 5 years, and they doubted Google, which took a long time as well, as you can see by the share price. So going to the next slide, markets don't always get things right, and this is an absolute fact. Academia, all the academics from the universities and everywhere will write long-winded papers about this. And they'll use the efficient market criteria. They use the capital pricing model. They'll use the efficient markets theory, that you can't make money out of the markets and that it's a zero-sum game. Maybe at a macro sense it's a zero-sum game. Someone wins and someone loses. But again, academia also says the market is always right. And I've worked long enough in markets to know that is not the case. And with academia saying what they're saying, they're basically saying no one can profit out of the market, no matter what market it is, whether it's financial markets, whether it's equity markets, whether it's bond markets. If they're correct on those statements, then you have to ask the question, why do 2 or 3% of people in the world, professional investors, make money? How did George Soros, sorry, I've got a spelling error there, not good on the old spelling. How did George Soros make the money he did? How did he sell the pound against the US dollars with the Bank of England, and he nearly sent the Bank of England broke doing that, and he made billions? How did Warren Buffett become the richest person in the world when he started buying stocks when he was 13 and became the richest man in the world, and actually didn't become the richest man in the world until after in his mid-50s. Warren Buffett made most of his money in his mid-50s to 80s. So, most of his money started to come around 55, and then he got richer and richer. If academia tells us that we can't make monies in the market and that the market is always right, then that's actually incorrect, because I've seen people in markets make a lot of money and consistently make a lot of money. Professional traders make a lot of money consistently, and that's a fact. So the thing is, stocks, crypto, foreign currency, whatever, go up and down because really a market is what someone is prepared to pay for something and what someone is prepared to sell for something. And it doesn't necessarily reckon that the price is right. There's a big difference between price of something and the value of something. Everyone knows where the price is. Everyone. But it takes uncanny people to know where the value is of something, to know the true value of something. And this is why people like Warren Buffett and George Soros stand above everyone else, because yes, they know where the price is just like everyone else, but they put a value on something because they understand intrinsically the underlying value of the company and the cash flows and the opportunity the company is in to generate revenue and wealth for the business. They understand what the company can do, to how it generates the cash flows, to how it gets its clients, and to how the money is going to come in over and above any other company in that space. Now, Ripple is one of those companies. Ripple has the clients, keeps getting the clients, keeps getting the people, keeps getting, more and more clients, whether it be banks, fund managers, insurance companies, high net worth people with lots of money, whether it be export companies, import companies, whether it be anyone that needs instant cash settlement. Their technology is expensive, so they charge every client for that technology. That technology costs a lot of money. Technology is often a long-term investment for any corporation. It will often be a 25-year contract for a company to change its technology, particularly its payment technology where you can instantly settle cash. Now, any corporate that puts on Ripple's technology will pay a fortune for the initial putting on of that technology. Not only the ongoing maintenance of that technology they will pay, but any transaction that goes through that technology, they will pay Ripple a clip, or XRP gets a burn, but it's a clip either way. What I mean by a clip is there'll be some form of payment for the ongoing use of that technology. And this is why Ripple is so profitable and has at least $20 to $25 billion in cash sitting in the bank with no debt. Now, Warren Buffett or George Soros, if Ripple was sitting on the stock exchange, would look at the underlying revenue of this company and the underlying clients of this company and look at the overall future picture of this company with the overall prospects of this country and look at the technology of this company that can instantly settle cash flow in their normal system up to 2,000 transactions per second when no other cryptocurrency can do it, and then they have another system where they can do 50,000 transactions per second. And you might say, oh, but there's other cryptos out there saying they can do 1 million transactions per second, like credit. Now, credit are only saying it. They can't do it. I could say it. I could say, hey, I've got a system, cryptocurrency Susie it's called, and I can transact 10 million transactions per second, 20. I don't get audited by anyone. I'm not even regulated. I could tell you guys and girls anything. I've got a cryptocurrency that I'm building the technology for, and I got $100 million out of you guys for US, and I'm going to generate a system that's going to transact instant cash flow of 20 million transactions per second. It's hearsay. It's balderdash because I have nothing to prove it. I've got no runs on the board, and I'm going to say to you guys, it's going to take me 5 years to build the technology. Are you seriously going to believe me, honestly? And I can put up all these people, you know, with blockchain experience, and they all look fantastic. But there's nothing in the legislation or regulation to say that I can't walk away with $100 million and go and live in Hawaii and have a terrific time. But I've come along and I've said, I've got a cryptocurrency called Susie, and I can transact 20 million transactions per second, which, you know, even 1 million transactions per second is technically impossible. So this is my point. You know, what other cryptocurrencies say, they haven't been tried or tested. Now, as I said, markets constantly get things wrong, constantly, and I've seen it time and time again. Why do markets constantly get things wrong? Why? And I'll tell you why. 1, total lack of understanding of the opportunity present, like now. 2, why seriously wealthy people can see the opportunity that other people don't see. And we've seen that with seriously wealthy people like Warren Buffett and George Soros and lots of other people. You know, like, what's that guy's name that's investing in XRP, and he's very wealthy guy. Tim someone, I can't remember his name. So they see things that other people don't see, and they see it early. You know, they see it straight away. And that's why they're wealthy, because they get onto things, they relax, they don't keep looking at the 1 cent move down, oh my God, it's a fire sale, XRP is down to 30 cents, now it's down to 10. They look at the big picture, and they're patient, and they know it's a 2 or 3 year view. Number 3, why does markets constantly get things wrong? The masses do not understand the opportunity early, just like we saw with the internet, just like we saw with Google. They don't understand the opportunity. They may not know about the opportunity. I didn't know about Google for a long time. They may not know about, I didn't know about the internet, you know, until I did, and then, you know, we still didn't believe it. They don't understand it, or they disbelieve it. They may not know about the opportunity. They know Bitcoin, but they don't know anything else. So the masses don't understand. They don't get it. So those that are in early, that wait for the masses to understand, will reap the reward. Now that makes sense, right? So people like us that are in early and the masses don't know, we have to wait, and we don't know how long that's going to take, until the masses understand That's just the normal mums and dads. Everyone does their banking will eventually use XRP and Ripple. We have to wait until those guys start using it and understand, and then we will reap the rewards. Now, I don't know how long that'll take. I'm not Houdini. Could take 2 years, could take 3. But I know it's going to take at least 2 years because we have to wait for the masses to understand the technology and what Ripple can do. Instant cash flow with volume, with lots of transactions per second, more than anyone else. 5, why do markets constantly get it wrong? Structural issues. Many big operations cannot take advantage of the opportunity now until the structures or the blockages are bulldozed away. Okay, now what I mean by that is the big money managers, the big people with the lots of money that manage your pension fund, the insurance companies, the guys and girls that manage billions and trillions, because they are under regulatory environment for equities and bonds and every other market, they cannot go into a market that is not regulated. And they can't go into a market that they don't even understand yet. You see what I'm saying? They need to make sure that if they do invest in this market, there are a proper regulatory environment so they can, because otherwise they're not protecting your money or my money. If my superannuation's sitting with BlackRock or it's sitting with Fidelity, for example, I don't want them, me, my super's in with them. What if they come to me and say, hey, Susie, I'm investing in, I don't know what, beetle rugs or something, because I don't know anything about that. No one knows anything about that. Why are you doing that? I don't want you investing your money in that because I don't know it and it's my money, So again, the big operators, the fund managers and the pensions, and they look after our pension. They're not going to invest in things they don't understand, and they're not going to invest in things their clients don't understand, and they're not going to invest in things where there is no regulation. Regulation is important because then they can start educating the masses. A fund manager might get you in and start talking about your fund allocation and say, there's a new asset class, we need to talk to you about this, and they'll educate the masses. The 6th reason why markets constantly get things wrong, human behavior. If something is cheap, they think something is wrong with it, and they tend to follow the masses. It's no different to, you have a whole heap of restaurants on a footpath. One restaurant's empty, but the next door's restaurant is really busy. What does human nature do? It goes to the restaurant that's busy. It's no different to a queue. Everyone's in one long queue, but there's a second queue, but no one goes to the second queue. You know what I'm saying? I'm the sort of person, I would go to the restaurant that was empty to find out why it's empty. I wouldn't go with them where, the masses go, because I want to know. I want to know why the restaurant's empty. That's me. But it's no different. So human behavior, like I said before, knows the price of things, generally as a rule, but doesn't know the value of things. And this is Ripple and XRP. Absolutely. The 7th thing, even in the most professional markets in the world, there have been incredible opportunities where the market has just been wrong. Okay, and the bond market, in overall markets, every market is generally considered one of the most professional markets, because in the bond market there are all different type of fixed income type assets. In the stock market, we all know what an equity is. Most people understand what an equity is, but when we talk about the bond market and fixed income, there are all different types of assets. They're not generic. For example, you'll get a mortgage-backed security, you'll get a discounted NCD, you'll get a commercial bond, you'll get a commercial MBS, you'll get a CDO, you'll get a CLO, you'll get a floating rate note, You know what I'm saying? You'll get all different types of assets. You know, you'll get a treasury strip. You know, you'll get a coupon that can be sold. You get a bond where the coupon can't be sold. There's all different types of assets in the bond market. There's not just one type of asset. There's all different types of assets. And that's why it's considered the professional market. Also in the bond market, there's a huge array of derivatives that are used as well in capital markets. You know, they'll use a FRA, a forward rate agreement. They'll use a swap. They'll use futures. You know, they'll use options. Again, that's why the bond market is called the professional market, over and above the equity market. But my point is, even in the bond market, even in the professional market, markets can be wrong. Absolutely. And that creates opportunity for, you know, maybe 1% of people that notice it. Okay, you know, there was a mispricing, as I said before. You know, the bond market, you know, will run sorry, there's a spelling error there. You know, quants, you know, they'll run all these computer programs, you know, generate quant curves for different types of curves. You know, the swap curve, you know, the funding curve for GE, the interest rate curve for, you know, Google, the interest rate curve for Apple, you know, the government curve for the US government, you know, an interest rate government curve for, you know, the Italian market. They'll arbitrage, they'll do all sorts of things. You know, they'll look at math models, they'll look at IT models, they'll trade things. So, you know, that's why the bond market's considered the professional market. No different to, say, a professional football club that trains daily on the football ground, kicking whatever, you know, learning how to pass or whatever you do. You know, but then you've got your amateur professional football club. So you'd expect a professional footballer not to miss a goal right in front of the goals, right? Because that's what they get paid for, and that's what they're professionals. So, you know, in 1999, you know, I saw this in markets in Australia, and it should never have been there. Even in a professional market, where a government curve, the Australian government curve, had a yield on a bond 15/4/2002 maturity, sorry, at the Australian date, 15th of April 2002 at 5.75, and the Commonwealth Bank of Australia, which was a corporate at that time because the Commonwealth Bank had sold a lot of their shares and made the Commonwealth Bank, CBA, basically a private corporate, okay? So CBA was AA, which is less than a AAA government bond, okay? So when something's less and higher risk, the yield should be higher, okay? CBA should have had a higher risk than the government bond. This relationship should have been the other way around. CBA bond should have been at 5.75 and the government bond should have been at 5.25. Now, even in professional markets, that sat there for 4 months. You should not have been able to get a government bond with AAA rating at a higher yield than a corporate bond, which was AA, with a lower yield. It just didn't make sense. And the market was wrong. So, anyone that was smart enough, like I was at the time, I had CBA. And I sold CBA and switched into the government bond at 5.75 and sold that for a pickup of 50 basis points for only an extra 2 months maturity. And when I looked at the bill curve, the bank bill curve, a 2-year duration only had a pickup of 3 basis points. So if you just say 1 for 1, this should have only been, if it was priced properly, you know, 5.73 with credit, you know, and 5.70, and then adjust for credit of 40 basis points, right? So I picked up 50 basis points to go into a better credit, AAA. So, you know, so don't worry if you don't understand what I'm saying, but what I am saying is the yield on something with a higher credit should be lower, and the yield on a worse credit should be higher. That is what should happen in properly performing markets. Because where your risk is higher, with a lower credit, you should get a higher return. Okay, simple. So my point is, markets are not always right. And that is what we're seeing in this cryptocurrency market. People know the price and it's going down, but they don't understand the value, that the value is made up of the underlying asset, the technology of the business. And also, because we're all amateurs to a lesser degree in this market and it's not known by the masses, the market continues to go down, but it will not be forever, like we saw with Google and like we saw with the internet. That's simple. What else have I got here? And what I will say is it will take a while for people to understand the technology. As I said, patience. No point looking at the cent machinations every day. You go mad. It'll be quicker than the internet was absorbed and Google, because we have the internet. Everyone has a cash flow problem. Then we need cash flow settlement instantly. Globally, people may not have toilets or sewage, but in Africa, in the remote areas of Africa, they have mobile phones and connection. Sorry, another spelling error there. So, that's why I absolutely have faith in Ripple and XRP. Again, like I said, it's time. Stop looking at the cents up and down. It just needs a catalyst. And what I mean by a catalyst is the IMF could come out tomorrow. The United Nations could come out tomorrow, which Ripple are all on the boards of these. The Bank of England could come out tomorrow. The Fed could come out tomorrow. Any of these big organizations that Ripple is connected with and say, we are going to use Ripple and we are going to use XRP. So we just have to be patient. As I said, I'm not a trader in XRP. I basically hold XRP for 2 years, a minimum of 2 years. And like shares, you put them in your drawer, you forget about them like a good bottle of wine. You put it in the storage cabinet, forget about it for a year or two at least. And you know what? Rome wasn't built in a day, and you're going to get a pleasant surprise. That's what I believe. That's my personal belief. What else have I got there? Anyway, guys, I hope that helps. Bit of a disclaimer there. It's for education only, just a bit of a chat, nothing too detailed, all hopefully easy listening. I hope you're all well. Please do look after yourselves, and I'll talk to you again. Thank you.